A potential resolution to the U.S. China trade war has emerged, with both nations agreeing to suspend the majority of tariffs on each other's goods for the next 90 days.
We achieved a total reset with China.
This announcement follows recent talks held by officials in Switzerland over the weekend of May 10th. On this, IBD Explains, we break down the latest on the U.S. China trade talks and what investors need to know. Here with me to discuss the latest is IBD News editor Ed Carson. So, Ed, tell us about this deal with China and what's the current status with tariffs?
Yeah, the China trade deal, it's tentative, as you were saying. It lowers the U.S. tariffs on Chinese goods from 145% to 30%. That includes a 20% that's related to fentanyl. China, for its part, reduced the tariffs on U.S. goods from 125% to 10%. So trade, which is basically it's halted with certain exceptions, can resume again. So it's a really big deal because this is really going to impact the world's two largest economies. So really a big deal for the economy and for the stock market.
So, Ed, we talked about what was in this deal. Was there anything that wasn't covered or addressed?
Yeah, a couple of things. On the one hand, China has maintained it still has rare earth export controls, and those are things that are used for and a lot of things, robotics, EVs, a lot of different things that require these rare earths for products. We can do them. We do some stuff in the U.S., but we don't do too much of it, and we don't do too much refining of it. So we sort of need that. Now, China probably is what's going on is that they have it set up that they could restrict it. It looked like they now have a licensing regime. So if anything happens, they could, in a moment's notice, just sort of cut that off. On the flip side, the U.S., a big issue is chip exports to China. It's not related to tariffs per se, but this comes out of the Biden administration and Trump's. What chips, to what extent are they restricting tariffs, restricting chips access to China? China's trying to work around that, but I'm sure they would love to get access to that. So those are a couple of the big non-tariff things that are still outstanding.
All right. So, what are the next steps here and what needs to get hammered out within the next 90 days?
I mean, I'm not sure what needs to be hammered out. I mean, because this is all ad hoc, because it's like the Trump tariffs weren't like an official deal. It's like this is in a notice, so they can just take it away. Chances are it'll probably just get extended. I mean, honestly, there might be tweaks here and there. There might be deals. Maybe China will say, well, we'll buy 100 billion in soybeans. They sort of said those kind of things back in 2017 or whenever those first deal was, and the first term didn't really happen due to COVID. Maybe Trump will let investments, but I think the general thing is these tariffs are probably going to be around here. Maybe they could even go lower, like with fentanyl. Maybe you could even see the tariffs on Chinese goods fall to 10%. But probably the real news is sort of already out on that front.
So, how is the anticipated deal with China maybe impacting other trade deals that are out there right now?
Trump often says nice things about people who then says meaner things about allies than our traditional maybe antagonists, but nonetheless, it does feel like with this and the UK deal that was sort of tentative, which didn't change things too much, it feels like the Trump administration is probably going to leave 10% baseline tariffs around the world, which isn't too much of a surprise. But at the same time, that it probably will fall down to something like that, 10% baseline plus sector tariffs. So steel and aluminum, some other things that might come in, but get some sense that's probably where things are going to go. So that, we're starting to get a sense of certainty. Now, that may not turn out to be the case, but that feels like that seems to be the feeling that things will go. That would be a tax increase on U.S. consumers. That would slow things down, but it wouldn't lead to shortages. It may not mean a recession the way we seem to be headed just a few days ago.
Now, a lot of focus has also been on how these tariffs would impact prices in the U.S. consumer. We saw a little bit of evidence of that in the April inflation data numbers. But what are the economic implications of this deal?
Yeah, so as I was getting to that, we'll probably see some inflation price increases because we're seeing that, not just from this deal. We're going to see this would probably ease that. We're not going to have those shortages. It means we're probably not going to have that same kind of inflation impact. We still are going to see some inflation because 10% tariff is still an enormous tariff. It's much, much, much higher than we've seen before, plus the sector tariffs. So we are going to see some price hikes. We haven't really seen it in part because the initial impact has been to see oil prices fall. We've seen airfares fall in part because other countries are boycotting the U.S. Individuals are not coming to the U.S. So the initial things have actually meant lower prices. But this probably means slower growth, maybe a little higher inflation than we would have anticipated without the tariffs, but we're in a much better situation than we were just a few days ago before the China tariffs.
And we've seen the impact on the markets from these tariff related headlines. So, what's your main takeaway for investors here as these agreements get hammered out?
Well, I mean, it's always the reaction to the news, not the news. But clearly, the reaction to the news has been very positive, and it's understandably. Look, we were headed towards a recession. It certainly appeared to be if we kept on going, and that seems to be at least that risk is much minimized. And so we've seen a massive rise as this huge risk, this huge headwind is turning to a tailwind, or at least, like normalizing now. That will normalize at some point. We'll get that, but a really big thing of headwind maybe fading, and maybe we're starting to see some glimmers of certainty, regardless of how you feel one way or the other. And that's something positive as well, that the stock market is definitely in rally mode in the indexes and also a lot of leading stocks. So things are looking really strong for the stock market at the moment.
Well, Ed, thanks so much for your insights today. We appreciate it.
Thank you.